Good morning. Today's October 16th, 2025. So right into it, an option play on ASML. I I always use weekly chart to start off my analysis. Um, Technicals, way away, right, above all the weekly moving averages. Um, I use a 13 weeks, 40 weeks, 62 and 200 weeks. Set however you want, but the big one is actually the daily 200 days moving average, right? So if it's above my first two lines, especially 13 weeks, right? 13 weeks times four, right? That's like half of 200 moving days average, and that's above my white line, above my 40 weeks, which is 240 weeks, 240 days, right? The yellow line, as long as it's between my white and yellow, the price action, right, or above or in between, that's fine. So that's the bull bias on it. Below a 200 days moving average, bear bias. That's that. Okay. So draw a long-term uptrend. Right. However, as you can see, take the latest low, relevant in the most recent 2-3 years, connect these points, and I get this location right here. Right. That's why it bounced off. Stop right here and bounced off. Right. Uptrend interpretation. Right. Pick two low point, extend it, see where they land. The more bottom in touch, the better. As your uptrend. Most recent top, yellow line right here. So it's right price action, ASML, right in between. Top above the uptrend, below the most recent high. That's that. Technicals, right? Okay, that's technical. Fundamentals. Move right along into fundamentals. DCF, discount cash flow models, right? Google ASML DCF and pick one. I use Guru Focus so I can see earning per share projections 10 years, 5 years, 3 years, and so on. The price of current fair market value 1043. If I do my own analysis, it's going to be probably 100 above, 100 below, around this area. All right, this is a quick way to do a DCF. Right. When you have time, you can go back and build your own models and plug in the numbers. When in a hurry, you're looking in a trade, right? Only own the stock is going higher. Where do I put a cover call, basically? All right. So that's look at DCF. Okay, 1043 is fair market value. Right. The high, we're looking at the last recent high is this line around 1100, right? 1043 is around here, right? 1100, right? So it's approaching this point. So I want to put out option. The question is, do I put it below or above? Well, depends how what is the probability of winning this trade. Again, then we jump right into the option strategy builder. Look for, we're doing a cover call. So basically I'm selling call. Right, so I'm short the call strategy, short call, and now I can pick the strike price and the expiration date. Expiration days around 45 days out. Typically, this is the average play. If it's less than that, you don't get that much premium. Too much too far, too much uncertainties. So 45 days is kind of like the golden area. Right. Strike price is delta dependent. Okay, right now this delta 1090 will give me a delta of 34. So that means that's 34% of it being in the money a day of expiration, which means around 34% chance of losing, which is pretty good. In actuality, the win rate is actually higher if you do the actual modeling. It's actually above 70% win rate, even it's a delta of 34. Right? So that is the level that I'm comfortable with, say a 70% win rate, right, around 30 delta, right, and give me a profit. Selling this will give me a profit of around $3,000, right, $2,950 to be exact, but around 3,000, round it off, right. So let's move it. As I move it to 1100, I will pocket 220 less. My win rate just go up just slightly. My delta, move accordingly too, right? So how far you want your win rate will determine your maximum profit. My recommendation is at least 70% win rate. 75, great. All right. If I move it to even further, uh, my win rate will continue to increase, but my profit will drop off. Right. So I will give up $500 of profit. Right. To squeeze just a few more percentage out in that sense. So this is why I will pick 1090. Right. Uh, if I'm more aggressive, or it's moving, so as you can see, the price will continue to change as the underlying stock move right now. So it's around $3,000 for 72% win rate, right? And so delta, yeah, above 30%, about 3 delta, around 3 delta. That's great. Okay, so this where I would write cover call, own the stock already, write a call. Where's my target again? All right, my target area is around here, and I will think about whether I take profit close to trade close to position or just hold it to the end and see what happens. All right. If I close out the underlying stock, I must close out the cover call in that sense. I would never do naked, especially when you're starting out. Right. This is an easy, quick, 70% win rate, make 3 grand in 40 days or so. I might manage it 2 weeks before expiration. That's very situational dependent. Right now, if I hold it to the end, assuming I'm holding this play to the end, this is what I would do. Assuming assuming I have owned ASML already and is making me profit, having went to my first profit target, and so I would want to get paid to wait to reach my profit target. Basically, I always say you collect rent that way. Okay, so that's the trade, that's the play, right? Quick, fast analysis, and that would definitely dive more into the DCF model and trick all that. But you should be able to do this when you're familiarized with it. You see a trade, do this, do the analysis, and then you have the rest of the day to put on the trade. And when you continue to do analysis in that sense. Okay, that's the ASML trade. Selling cover call that you already own the stock and is making you money already, and is approaching a nice profit target. That's when you start laying out the trade. On back of the market is on the up day too. Market is overall up. It bounced back from the drop last Friday of the Trump China tariff, and then it dropped, and then Monday they ease off a little. It rallies back, and then now going pretty much sideways. But yeah, so that's approaching a price target. Okay, that's all. Thank you for watching.